Good morning. Today is Monday, November 14, 2022. Going into a new trading week. Just kind of want to do a big picture game plan analysis and see what we need to do. All right, so we're starting off with the weekly chart. I'd like to start with the bigger picture, and like to look at where the ranges are. So this was last week, previous week, and the week before that. So we are looking like we're putting in new highs on a weekly level. All right, new highs. So momentum is seemingly going up. All right, so what we're going to do is I just put these in here. This is the previous week high at 4,000. This is the previous week low at 37.30. So that's about a 270 point range, a little bit higher. Yeah, 271.5 point range, a little bit higher than the typical volatility. So that's a big indicator for possible reversion to the mean. Whenever you have these big ranges, price usually snaps back to mid-range. All right. Okay, so what we're going to do, we put the high in, we put the lows in. I grab one from the week before that. All right, and we're going to just mark this right like that with the time marker to just tell us, to just remind us that the previous week was up. All right, sometimes when you go down to the lower time frames, it's easy to get disoriented. Very easy to get disoriented. So, any little trick that you can use to stay oriented to the chart, meaning keeping the big picture in mind and the little picture in mind, anything like that will help. So that's why I use these lines. So when we go down to the smaller time frame, we always can appreciate the higher time frame, right? All right, so let's go to the 4-hour chart. All right, so on the 4-hour, what we can see is that we are starting to, break down a little bit. We're starting to move down. That's our anticipation. And the evidence is kind of pointing to us moving back towards the mean. All right, so here's a series of highs on the 4-hour chart. And ever since we put in that last high on Friday at 1 o'clock, market's been pulling back. It's not really making new highs. It's putting in new lows. So we can see at the 1 a.m. To 5 a.m. candle, there was a close lower. And this is the 5 a.m. to 9 a.m. candle. That was we still have an hour and a half to go to see where that closes. But over these last few periods on the 4-hour chart, you can see that we're starting to close lower. So that would mean, we can look at some of our indicators. The indicators are telling us, this is the stochastic. It's telling us, you ran up here, you made an extreme somewhere. But remember, the indicators are not, what's the word I want to use? They're kind of like a bad GPS system. They kind of tell you, yeah, you might be at an extreme, you might not be there. But so we have to look at the chart to tell us exactly where we are in time and exactly what's going on. It's like a GPS system in a sense. Like it gives you an idea that you might be at an extreme, but then you have to look at the chart to see if that's a confirmation or not, right? So obviously when we hit this new weekly high, the stochastic was confirming that, indicating that you were at a market high. Now you can see over the last few periods, the fast line is below the slow line, and it's kind of moving towards the other end. Okay, what would we anticipate on the higher time frames? All right, on the higher time frame, like 4 hour, the 12 hour, look at where our moving average is. Price tends to move back to that moving average. So that's my anticipation right now, is that we're going to move back to these, somewhere mid-range. It's like 50%, or even in here it'd be like the 68% level. And I want to see resistance being respected. These tops, I want to see those being respected. I want to see high volume selling on the 1 minute, and then I want to see a quick pullback and you get in. All right, so let's go to the 1 hour. All right, so on the 1 hour, we're just getting more and more granular here. We're trying to locate maybe a range. Okay, like this is a good range. The market made a big sell right there. Not a lot of volume. I like to see high volume, but nevertheless, the market is right now is respecting these the sellers. Okay, it's pulling up mid-range into this range, and we're anticipating that this range or these highs will stay intact as resistance, and the market will continue to go lower. On the 1 hour, let's see, on the 1 hour, yeah, the 200 period is around the 50% level. So we would expect price to come back in here somewhere. All right, now let's go even a little more granular. Let's go down to the 5 minute. And you can see this is our range we're dealing with since 1 a.m. This is the 1, and ever since 1 a.m., we've been respecting resistance. The market is pulling back mid-range into that 1 a.m. range that we were looking at, and this would be a really great sell. Right, you'd be selling here, shorting the market here at the moving averages. Stop above the period high. Right, we'd be stopping, putting our stop loss above here. You would be risking you'd be risking 7 points times 50 on a micro contract, so that's $35. So you're not risking much, and then the potential of this trade, if it gets mid-range, let's say if the market gets back to that 38 level we were looking at, it's a big, that's a big risk to reward. You're looking at risking 10 points to get 100. It could be a very good trade if you're right. If you're wrong, you don't lose a lot. Yeah, we could get back to here, so there's a lot of room for profit. 38, you're looking at 150 points. And once it's back there, what are we looking for? On the bigger time frame, remember the weekly is showing us market is moving higher. So once it's back here, we would be looking at breaking out a new high, getting on the train to go back up. All right, so on the 5 minute, I think this is a good example of a really good potential high risk to reward opportunity trade, right? All right, so it's still sticking around in this range. Doesn't look like the market is moving strongly higher. And you can see if we come over here from Friday, the Friday high, really this line should be up here. The market's been kind of, trending lower. There's been lower highs. There's a high. Here's a high. And so, trend lines are, I don't use them much. I just visually get it. I can see it, right? That the market is trying to go higher, failed. Trying to go higher, failed. Trying to go higher, failed. Trying to go higher. So this right now is a push up that I'm assuming is gonna fail, right? So if I were gonna short the market, I'd be shorting here, stop loss above here. All right, that's the process. You always want to take a top-down process. Any point in looking at the 1 minute? The only point in looking at the 1 minute, the 1 minute is super granular. I'm looking at the 5, and I want to see my stochastic overbought, which we know we did that on the 5. But on the 1 minute, I'm just trying to get super precise on that entry and what I want to see ideally. See if I can pull it up here. Okay, what I want to see ideally is a blow off of the bulls. I want to see the bulls try to push really hard and fail. How do I see that? Okay, well, let's look at some volume. Okay, so you see how this yellow line right here, you can't really see it great, but it tells us volume average. It's taking the average of the last 50 periods and the volume of the last 50 periods, dividing that by 50, and so we get this line. Anything above that line is higher than average volume. So what I want to see is bulls push on being overbought. I want to see that volume being go up, high volume, like that, right? I want to see that. Usually that's like a sense of exhaustion, like they're pushing as hard as they can push right there, and that's it for that fight. Okay, that's kind of how I like to think about it. See, back here they tried push up on high volume and it failed. They didn't make a higher high. It failed. It pulled back. See here, they pushed high and it looks like they're failing. Market is the bears are in control. They're pushing back. All right, so that's just 1 minute stuff. I don't know if it's gonna, it's just kind of a last minute thing you do to get a sense of who's in control of the market. Let's just say it that way, right? All right, so that's the swing trade. We know what we're doing on the swing trade. If I were to do a trade today, what would I do? What would I look at? All right, so let's go back out to the 1 hour. Okay. Now on the 1 hour, you can see that we put in a previous week high up here, previous week low up here. Now with the options, you're playing ranges now. You're really looking at, what range are we dealing with? How do I play that range? What's my general feel on the market? Okay, so we're putting in higher highs. We know that on the weekly chart. And the market is really overbought. It's way over the average price, which is the 200 period moving average. I'm waiting for a pullback to around in 38, somewhere around in here, 38.80. That'd be about mid-range. And what I would do is look at I would go down and look at, maybe putting on a calendar spread around there. What does that look like? 38, 38.80 calendar spread. So let's see what that looks like. All right. So the 38, we're looking at this period. A lot of liquidity here. Come on. All right, so $38.80 around here. Okay, we're gonna buy 2 weeks out, and we'll look at that. Okay. So the market's up here right now, and it's up here at 39.92, and our calendar is centered at 38.80. So my assumption is that the market's gonna pull in to that, mean, that mid-range area. So my calendar would be kind of off center when we start. Let me take off some of this and that and that and that. There we go. So yeah, our calendar is starting off asymmetric. We got a little bit of room to the upside, but really the meat of the thing is in right here. If we look at the Greeks, the delta is negative. The theta to vega ratio is super, I don't like 4-to-1 vega theta ratios. So we would have to do something there to get that back under control. We could sell a call spread with this. We could do a iron condor on top of the calendar spread. But there's, we would have to do something to control the theta vega ratio. We could sell a call, there we go. And that gets the ratio a little bit better. All right, and so you can see that, we're starting off pretty good here because the market could rally up pretty far, and our break even is, way out there. If it comes in to the center, that's what we want, and then, if it keeps going down, we would start to sell call spreads against that to neutralize our deltas. So at the end of the day, we'd have a condor with a calendar until otherwise. and just kind of let the theta come in. All right, so that was a great overview. We will reconvene. This is SPY weekly recap and kind of a game plan for what we're looking for going into this week. All right, take care.